Hello, traders. It is 8:01 a.m. Chicago time on Thursday, the 3rd of September, 2020. Thanks for joining me on episode number 1833. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Hopefully, you're hearing me loud and clear. I need to check that every day just to make sure. Overall, market sentiment is mixed to allocation of safety this morning, and that's where we stand currently with the DAX and the Euro stocks, the European markets, leading up 1% and 1.32% for the Euro stocks. The laggard today is crude back down at $40.49, down 2.46% on October WTI after yesterday's inventory release. The Nasdaq's off 159.5 points, 1.29%. It is the laggard in the index space, and the S&P is down about half of that, down 19 points or 0.53 after what was yesterday an absolutely stellar run up, and we'll discuss that a little bit. I'm going to do my best to keep this short. There's a fair amount to talk about in terms of structure and the narrative. I'm seeing some interesting anomalies here. What I'm not going to do is guess the top. I'm not going to play musical chairs and try to guess when the music's slowing down or stopping, as they say in that movie Margin Call. That's just not my job. My job is to just see where we are now and what chunks of this big old sandwich I can bite into without trying to eat the whole thing. So that's where we are. Gold is suffering a little bit today, not very much. It took some edge off yesterday. It's down at 1,940 as the dollar's stronger. The dollar's up 8 cents. The dollar's up 8 cents, and so gold is a little weaker. Interestingly, the euro is stronger while the cable's weaker as well. So that's where we stand this morning in terms of the calendar. Quite a few releases in Europe this morning. The market numbers came out. Market as in market, M-A-R-K-I-T. The PMI numbers came out for Europe, Germany, France, Great Britain, and the Eurozone. And Canada put out its balance of trade, which came in worse. And then the balance trade for the United States, of course, came in worse, as we would anticipate. 59 billion draw, 59 billion deficit was the forecast. We came in at 63.6 billion. Initial claims came in slightly better, expecting 995,000 new claims this past week. Came in at 881,000, slightly better, still pretty bad though. And then of course I want to remind, we do have some key numbers still today. We do have the same market service PMI and composite PMI. 15 minutes after the open. 15 minutes after the open, and so we need to pay attention to those. ISM non-manufacturing also due at the top of the hour. Non-manufacturing PMI and the non-manufacturing prices and new orders. And then that wraps us up for the day until Fed's Evans at 1 o'clock, not expecting much there. Tomorrow, however, is the big day. Non-farm payrolls and unemployment in the United States expected at 1.49 million jobs created in the month of August. We'll see how that goes with the unemployment rate at 9.9%. Quite amazing versus where we were, which I think at the low, the unemployment rate in the United States was at 3.8%. Just a terrible time for employment. And then that wraps up the session and the week. A reminder again that on Monday, We do have a holiday, so tomorrow is not only unemployment, but it is also uh, technically the last Friday of summer here in the U.S. And so we are likely to see a quick, kind of a quick fling in the unemployment release, a quick, a slight adjustment on the open, on the cash open, and I expect the session to go absolutely dead for the rest of the day on Friday as the long weekend kicks in, and it's a chance for families to go away for the last weekend of the summer. And then, of course, Monday, the market's open, but the sessions are abbreviated. I will not be here Monday. No trader bite on Monday. And then also, I'm gone Thursday, Friday of next week. It's my first chance to actually take some time off since last year sometime. So that's all. That's all there, folks. Let's take a look at what was expected yesterday versus what we got yesterday. The primary scenario was to drop into the gap. We were opening up in a relatively large gap, about 18 points or so. I was looking for us to drop into the gap and then get an impulse up, breaking the high, and then to run up for the session. Those of you who were here yesterday, I mean, I'm not making this up. I'm not changing this after the fact. This is just simply a review of what was expected based on the narrative that's in front of us. And the expectation is for it to push to at least 35.65 yesterday. The two volatility sigma based on 20-day close to close historical volatility was at 62, was looking for 65 on the high. Oops, was looking for 65 on the high. Here's what actually happened. Just kaplow. It's, you know, it's right there. We ended up dropping a little bit on the open. Uh, we ended up dropping on the open and opening lower than where I had anticipated or where the market was. So we ended up pushing to 33.75. We ended up leaving a gap open below right here. We ended up, excuse me, wow, what was that? We ended up leaving a gap open below, and we ended up getting that impulse higher. So we did get a drop. We got almost an open drive on the open as expected, and then we got a reversal break higher above the 52, and then there's the choo-choo train. Choo-choo, choo-choo, choo. This is our target right here. It got to 67. The target was 65. Pushed to 67 for a nice little pullback, 10 points there, and then it just drifted up all the way into the close. This thing was a monster yesterday for several reasons. The pullbacks were very shallow on the rally, so if you look at these pullbacks, very, very tight except for this one here. Never came back to test the IB, never came back, didn't come back to test the mid and the VWAP once it started moving higher, and all of the pullbacks were very shallow, about 2.5 points or so in general, 2.5 to 3 points in general, making it difficult to jump on if you didn't jump on at the very beginning. Here are other things to consider. Let's squish this down and look at the delta as price was moving. So price moves down, delta moves down. Price goes sideways, comes back basically to the open right here. Delta is way lower. Price goes sideways, delta starts to move down again. Price goes down, delta moves down, and then price goes way up, delta moves up, but still negative. We are well above the open at this point. We are 20 points above the open, but the aggressor, the volume-based aggressor here is not present. And if you're looking at the footprint or the individual bars on the way up, Um, on the way up, it shows a lot. There was a lot of delta divergence. So what we had yesterday is that we had a lot of false kind of weak pushes higher. The market was moving up more on, rather than lifting, the market was moving up more on the offers being pulled higher and price moving up on low volume and then getting hit once it rolled over. Uh, and it just did that for the balance of the session. To me personally, what it looked like yesterday when I was watching the tape, especially in the order flow, which the order flow can be fake. There's a lot of spoofing and things like that in there. But when you look at the order flow, it looked to me like it was fueled by these shorts that are jumping in, trying to anticipate a top and then covering, jumping in and covering, and it's a small lot type of movement on the way up. I mean, generally, when we look at the volume delta, it was large lots kind of continuously pushing higher yesterday, but the small lots seemed to be selling into them and then covering, and so on and so forth. And so what we ended up with is a market that moved up 40 points at the high, 40 points at the high, and at that peak, it was still down 6,000 or 8,000, actually, 8,000 contracts net from the open. To me, this just looked yesterday was just a sucker's play like I've ever seen. For those of you who look at delta divergences and so forth, yesterday there were so many false signals on the way up, and it created a delta divergence, and then it looked like it was going to rotate, then it would just squeeze through, and then you'd get another delta divergence, and it looked like rotate and it would squeeze through. Yesterday, very, very destructive to a lot of people. Hopefully, you guys were not a part of that, but I'm sure, statistically speaking, many were. Very difficult day to figure out what it was trying to do, other than seeing it after the fact and observing that, well, it was an up day pretty much from the time it broke the IB on the second or third run. So this rally yesterday just, in a way, did not seem to have a lot of substance, but for not having a lot of substance, it sure moved 30 points from the low here to the high, about 54 points. It sure moved quite a distance. So it's just a very tough play for short time frame traders, and really nice play for swingers and investors. Obviously, the S&P just drifting up pretty well. What has happened since? So remember, yesterday, big rally on negative delta, and then what has happened since? It has basically tried to retest. This turned into a trend day. It was a balance day, turned into a trend day. Multiple distributions yesterday. Very active price discovery. Multiple distributions, and we finished near the highs. And then what we did is, in the overnight session, we attempted to push that high even further and could not. And we ended up making this short time frame channel until the European Open. The Europeans came in, popped higher, and we've resumed that channel down. Market seems a little exhausted. The delta is negative. The overnight inventory is mostly short, and we're well ahead of the full session VWAP and mid so far, with the point of control at the lower distribution, which had just moved there just about a half hour ago or so, and we end up with a double distribution kind of profile. Yesterday we left a single print right here. We left a single print at the 69 and a quarter on the market profile. That single print, again, 69 and a quarter, and that happens to be That single print area happens to be the low volume node for in between the two distributions, which also happens to be a low volume node in yesterday's RTH trade, day session trade as well. And so I'm watching how it responds. And as the market continues to hold down here, maybe extend the overnight low down from 57 and a quarter, which is a stock zone, from 57 and a quarter, this will bring VWAP and mid in line with that single print, and it creates an opportunity for a virgin or an initial short test as a setup from below. So we need to pay attention today to the open, and we need to pay attention, what is that opening price? And then we need to pay attention to how the market treats the opening price we would want to trade from the direction of where we are versus the open. And then as a backup, we have this 69 and a quarter as a line in the sand between the upper and the lower distribution. This is important stuff. I know I'm saying a lot of things, but this is something we have structure here that is likely to be quite meaningful for the session. So let's jump right into what's expected for today. It's 8:17 here in Chicago already. It's time to wrap things up. Okay, so what are we expecting for today? So yesterday, scenario one was pretty much nuts on, and today, the expectation with the overnight inventory being short, the expectation is a response, a response early into the 65 area, which was the target yesterday, the upper target yesterday, really pushing to all the way up to 87, was quite an extension in both the daily range, the expected daily range, and really was done on thin air in terms of aggression. Volume yesterday was really good though, 1.5 million contracts in the RTH session. That's the highest volume we've had for a little bit. But I expect us to push into the 65, and then I'm looking for an impulse down that extends the range down, and I'm looking for a test of 35.50 and coming back into this 42 area before the bounce into the non-farm payrolls. I'm looking for the market to bounce out between yesterday and today, to bounce out into the long weekend, profit taking as we head into the September. Generally speaking, seasonality wise, September is a pullback month, but I don't know if this year will refute it or not. The secondary scenarios, we open in what we've seen in the last couple of days, an open drive down, extend the overnight low, push into this 50 area, and then have an impulse up. These long lines, by the way, these are all impulses. An impulse up back into where we were, test the 65.50, get into the 69 for a failure at first, and then start to challenge. And then if it does challenge, and we're looking for the high volume node right here, the high volume node in yesterday's session and the overnight session. I'm looking for 76. I'm going to write it right here for tomorrow. 76, 75, 76, 75, 77 to be the last, the kind of the target or the upper limit of any rally today. Okay, so I'm looking for today to be an inside day after what is a very, very wide ranging day yesterday. Again, it pushed through one volatility sigma, closing sigma, two sigma, two volatility sigma, and it pushed through three volatility sigma. So it extended the close to close. It was extended more than 60 points up before it pulled back and it closed below three volatility sigma and firmly in two volatility sigma. What does that mean? It means yesterday's range was really, really stretched. It was a rubber band that was quite stretched. And so I'm expecting today to be an inside day, probably a profit taking day. It's who knows? Maybe that yesterday was the blow off top that everybody's been talking about since April as the market continued to rally. Anyway, I'll leave you with that. Good luck. Don't forget to subscribe to the YouTube channel. You can do so by going to ft71.com/YouTube, all lowercase. If you've already subscribed, then you don't need to do that. But do subscribe and then you'll get a notification. YouTube has changed some things around again, and it makes it a little harder to kind of get that notification until it doesn't send the notification until I start the stream, which is kind of annoying now. So subscribe so you can get that notice. I'm hoping, of course, with this effort, I've been doing this a long time. Again, this is the 1833rd episode. I'm hoping that with every time you're picking something up, because in prop, um, you don't sit down and learn everything all at once. You hear it, you kind of pick up some things and ignore others. I tend to share a lot of information, and then over time, just the repetition and seeing it in front of you unfold every day is the best way, in my opinion, to learn. That's how my traders learn. It's just constant repetition, constant repetition. And so I'm hoping you're picking things up every time so you can see in different market regimes and different environments how the narrative changes and how to create a vision for what the day might unfold like so we can have a plan and then just trade what's in front of you. We're free to trade what's in front of us once the market opens. I appreciate your listening. Take care, and I'll catch you tomorrow morning. Take care.